What is up, everybody? Logan here again with another video coming right at you. I'm joined by Halcyon again, and we're going to go over the Roblox play that we had this week. We did a call debit spread that returned us 114% on our initial investment. We had a really nice setup forming. Halcyon's going to go over that in a little bit for us. So I just wanted to give you guys a brief rundown on this. I had 5 lots and walked away with $745 on the play. So it's a great start to the week. And I'm currently laying low in the grass right now. So that's going to be everything for me. Halcyon, how are you doing today, my man?
Doing well. What is up? Actually, you and I were talking when we found this, and I thought it was worth. I actually took a snapshot of it, but I'm just putting my toss here and zoom back to time. So we found this on 6/23, and I'm pretty confident we got in on 6/24. Click. Yeah, 6/24 on this trade. But I think we found at the end of the day 6/23. We found it we found it on 6/24, like middle of the afternoon. And I think it just wasn't on. I don't know. I was on the radar before then, because normally we have a list running of things we're stalking or hunting. And this was just a really crispy setup. And so I like to rank the setups that we see as 1 stars to 5 stars, 1 stars being the worst and 5 stars being our best setups. And this was definitely a 5-star for me. Arguably could maybe have been a 4 out of 5, because our daily chart wasn't as perfectly clean on the indicator side. The price action looked great, but the indicator side wasn't quite as perfect, but everything else was just, it was in line, exactly what we looked for. Especially where we are in this market, where it looks like everything across the board that we're tracking is all in the nosebleeds on the shorter time frames. It's kind of this interesting mix of short time frames are super overbought, but the normal kind of the middle time frames, your dailies and your 4 hours 195s, look a lot more at the mean, kind of at the normal part of where they trade. So it's an interesting kind of crosswinds happening here. So anyway, so what we were looking for, and I'm just going to walk through that and why we decided, oh yeah, we got to get this right now. And let's put some drawing tools on here. So one of my favorite, if not my most favorite indicator I like to use is the TTM squeeze, which we talked about that maybe last video, but TTM squeeze made by a guy named John Carter. He's an absolute machine when it comes to trading. And he has some of his tools that are on Toss and TradeStation. Pretty sure TradingView, Tasty has them on there as well. But one of my most favorite ones from him is the squeeze, which is basically a visual representation of what some of the Bollinger Bands and Keltner channels are doing, and a few other items all kind of combined into one. And so what you look for is trying to find these red dots showing up. It's a little bit small here, but you'll see, you look for these red dots to show up. And so I have this is the pro version of that. So there's a few little things going on with some black dots here, but ultimately you're looking for these red dots to show up, which is telling you that price is in a point of getting ready to explode one direction or another. And it's our job as traders and investors to take a look at which direction do we think that's going to go, and then take advantage of that. So when we were looking at this in real time, which is about as close as I can get to real time on these charts from where we were at that time, this is what we saw going on. So I saw price action and momentum going up. Same thing on the charts, going up. We saw on the 30-minute chart, and this is just I like to look at all my stocks from multi-time frames. So I want to see what are the shorter time frames: 1 hour, 30 minutes, 10 minutes. And then the 195, so that's just half the day, cut the day in half, basically. 195, a 4-hour chart, and a daily chart. That's how I view a lot of my trading windows. And these all just lined up to look like mirror images, with all having some variety of a squeeze going on at the same time. So we had a squeeze in the 30 minutes, showing right here. We had a squeeze that had just finished firing on the 10-minute, rocketing the price up. And then we were in the process of going from negative momentum to less, basically to momentum falling away on the negative side and starting to come back up. And where it was on the actual price charts it was a setup that doesn't happen all that often. I think the last time we had that happen was Amazon a few weeks back, which we took long positions on that as well and made solid money on that one. Then we had a squeeze here, of course, which is the one interesting thing why I wouldn't call this perfect 5 out of 5 was we actually had fired short on the squeeze, which is unusual for you to fire short but have long price action. So I'm wondering if this is because the stock really hasn't traded for, I don't think, maybe even a year at this point.
Yeah.
9 months maybe. That it just doesn't have enough data to keep this clean. So either way, you can kind of see this kind of same general price action going on with all of the time frames, which to me is just screaming this price action is going to move up. And so we had called out that we think if we can get this to hold over 85.50, which at the time was basically where all these longer term moving averages, and I like to use the 89 period moving average. Again, there's a million and 10 ways to go about doing this. For me, just from simplicity, I use the 89 period moving average for what I view as the longer term. And whenever we get underneath it, usually tends to be a problem to get over it. And and that's basically what I was trading at. So I was like, we can get over 85.50. I think this thing is really going to get running. We can close a bar over that. And sure enough, within, gosh, it was almost instantaneous. And these are the best kind of trades. Like as soon as you get in, an hour later, you're on a rocket ship and just riding away. So let me just move the price action forward because we closed this. We got in on the 24th, and then we closed it on Monday. I think I closed mine on Monday. I think you closed yours on Tuesday, but
Today, yeah.
Or today, yeah.
Yep. I closed mine today for it was literally an extra $5. So I was like, all right, well, definitely not worth holding it an extra day, but
Oh, that's all right. I mean, it was never know. So then here's what the price action is. As soon as we got it, we just started seeing this rocketing and rocketing up. And here's where we are right now. So we can zoom in a little bit here and zoom in a little bit closer to here. Closer here, closer here. We did an 84.87 vertical debit spread. So we were buying calls of the $84 strike and then selling the 87 to kind of offset some of the cost of that. And, and taking advantage of it. It's trying to be, again, it was a risk controlled long. I don't personally like to be just, hanging out there with long calls and long puts here and there. So I usually have some kind of way to control that. This was probably one of those times where we should have gone just straight up long calls in this because it was such a solid setup. And even with that said, I still think there is plenty of additional room to go on this. We just got to our max profit basically, and there wasn't a point of hanging out for a couple more dollars. Get the capital back in, recycle the profits back in, and put them back to work. So this is what, to me, in my opinion, would basically, if you were to made this still squeezing and not had fired short against us, that would have been a 5 out of 5 for the setup. The other thing to note on is that for me, I like to use the standard deviation channels to give me a sense of field position. And the way for my own self, and I think Logan and I, I've talked about this before, but the way I like to look at what's happening in a particular positions or stocks price action, I view it like a football field. And to me, this white line that I create and this yellow line are basically the 20s, right? Most the action, if you watch a football game, happens, we're talking about American football here, it happens between the 20s, the bulk of it, at least 80% of your actions take place between the 20s. And so it's a good bet, at least to me, and the way I view this is that when you get down to the 20s, that you're going to have some kind of usually a significant action point takes place, and we're going to see it turn around or go back up one way or another. Same thing when you get to the top, right? When you get to the top end of the 20s, we're usually going to see that have some kind of pin and come back down. And so for me, I like to trade while these are moving back and forth. The ultimate pickups on a lot of these positions are going to be if we get into these lower, which I call this, this is basically like my 15, my 10-yard line, and essentially the goal line. And on the rare occasions we get a position to go all the way down to the goal line, that's basically get offensive because there isn't anywhere, you have the entire playing field to work with. Versus up top, when you get up into the top end of this, which is being at your opponent's 5 and 10-yard line, and they're in basically scoring a touchdown, you're not going to call your playbook to run Hail Marys at that point because there's no field position left to work with. There's some exceptions to that rule, but for the most part, if you stick with this, you'll find that this tends to work a hell of a lot more regularly than it would be if you did this otherwise. So again, and you can see on the shorter or the longer time frames, the same thing holds true. And I mean, it's just math that's in your favor here, and that's just how I like to use it. So when they all line up, or you're on your own 20s, you're getting squeezes going at the same time, I mean, that is get long, get aggressive, especially a stock that's trending up. And you can see that by how the deviation channels are pointing up versus, for example, on this 30 minutes, they're more sideways to slightly down.
So I get this question all the time when it comes to why we do the plays we do.
yeah,
And what was the reasoning behind the 87, 84 for our strikes, right? Like we sold the 87 and we purchased the 84. What was the
sure.
reasoning at that moment to pick those two strikes? I would say that's probably the most consistent question I get.
So there are a couple of things in that. So we'll just zoom into the hourly and kind of talk through that for a second here. So if we zoom back in and go over to roughly where that was, the 23rd, which is going to be right around here. So keep in mind, we couldn't see that candle there, right? And we were somewhere in, we're back here further. Somewhere in this part is where we were picking this up, this trade, right? So when I was looking at these, and actually let's go over to the shorter time frame, the 10-minute. I'm taking a look at the odds as to where do I think this price action is going to move. So let me get back here a little further. And so notice where 87 is. It's the mean, right? So I think we would have been, I want to say we picked it up and it was just a hair over $84. That's why we put it in the money call and we put it out of the money for the short on this. And honestly, what I was looking for is just to move from 84 to 87 based on going and hitting the mean with all the price action pointing up, getting back to the mean, which is this middle white line. It's the 50-yard line. That was what my expectation was. And that we would hold above that price target once we got there into expiration. Because remember, on a vertical debit or called debit spread, is we need to be above that 87 strike at expiration to get max profit, right? Or you got to blow through it, like, and get up to like a 95, 100 in real short order for you to see at the max profit as well. And so that was what I was thinking as we were going through this was let's give it a chance to give it some room to run a little bit here. And then on top of that, that's going to give us pretty good odds that we're going to get above the mean and we'll hold the mean at least, which means that, getting max profits can be, very much the odds are in our favor for that. So that was, I'm not using deltas or something like that as to why I chose that. I was literally just looking at this and saying from, the running the mean, that's what I'm looking at. Now, and we were also going literally, it was like a 6-day trade or something. So it wasn't like I was sitting out a mile out here. Now, again, if I was trading longer, I would have probably done more towards the top end. So about whatever this would have been at the time, which would have been 90 or so. I would have looked at more of like a $90 on the other end of the vertical on the short leg, because I would expect to give myself the time to have it work up towards that. Right. So, and of course we hit up there and now we're retracing, which again, keep in mind, when you get into this end of the playing field, this tends to be, a pretty difficult spot to push through. Once you hit up into these ranges, it almost always pushes things back down on you, with the exception of DocuSign. But everything other than that, for the most part, follows that particular set of rules. And this works time and time again. So if you haven't used standard deviation channels yet, take a look at them. I think you can find them on a couple different platforms, but just slap them on a few on there and see if if they help you out with trading. For me, I couldn't trade without them. I'm just so used to doing this now. I'll just take these off so you can't see them. You can see what I'm talking about, how different. Oops, close it out. So let's apply that. And now look at our trading without being able to see where this price action can move around to. Again, it gives you to me, it gives me a different feel to what I'm doing. I have a much better sense of where I can expect price to go. Now, keep in mind, we are always playing probabilities here in trading, especially options. We're not trading. Nothing is certain. Nothing is guaranteed. We could have been dead wrong on this and we would have lost all the capital we put into it. But the odds and the price action all suggested that, with all the indicators pushing in our favor, they all suggest that we're going to keep pushing up, and that's what happened. So there you go. I mean, that's my mindset going into this. And I also felt, give me a little bit of time. We didn't do that Friday just because it was too short of a turnaround, but I thought giving it a week to push over 87 would have was a gimme. I think if you look at my commentary during the time, I was saying like, there's going to be no problem. We're going to hit 89.90 right away on this. So
it was awesome. Is that everything you want to touch on in this?
That's all, man.
Cool. Well,
you got it.
That's going to be everything for us. I appreciate you coming back on as always. If you guys could leave a like, a comment, and subscribe on this video, it helped the channel out greatly. If you guys want to come join the Discord and follow along with the plays, the link is in the description, as you guys already know. That's where we took this play, and we haven't taken a call debit spread in a minute, so it was cool to see it work out, and I love that setup and just everything, the whole analysis behind it. And it was a great trade. I did well on it, but that's going to be everything for us. We will see you guys in the next one.
Adios.